Hello and welcome to this week's market update. My name is Ed and I'm one of the traders here at Northern Gas and Power. Spot prices in the UK were up 7.26% week on week as the market saw a reversal after the news that Azerbaijan and Ukraine struck a deal to transport gas through a pipeline that currently imports Russian gas. This would have eased concerns over a reduction in flows through the pipeline when the contract between Russia and Ukraine comes to an end at the beginning of next year. No official sources confirm this story, and this has seen the market rise after a substantial drop. Temperatures fell by 3.9 degrees Celsius week on week to 13.6 degrees, just 1 degree Celsius above seasonal normal. Consequently, average UK gas demand rose 24.52 MCM per day to 128.3 MCM per day, driven by a 48% increase in local domestic demand. However, gas for power fell week on week by 17% to 30.37 MCM per day, with the UK seeing high renewable power generation. TTF prices similarly matched the MBP week on week, rising 5.45%. The spread widened between the two by 2.55 pence per therm to 2.9 pence per therm, promoting LNG delivery to the mainland Europe. Asian spot prices decreased marginally by 0.18% week on week, as average temperatures were relatively unchanged from the previous week. US spot prices saw a 10.35% increase week on week, as Hurricane Helene's path through the Gulf of Mexico reached land as a Category 4 hurricane. Although storms are more likely to reduce gas demand and prices through power outages and shutting of LNG export plants, the hurricane has missed LNG plants near its path, keeping gas demand high. The UK and European market MBP front month and curve contracts were up across the board. UK and European curve prices rise week on week as news that the gas transit deal between Azerbaijan and Ukraine was not true. Escalation in the Middle East continued throughout the week. The UK sanctioned Russian LNG, targeting 5 vessels and 2 associated entities involved in the shipping of Russian LNG. With winter approaching, European gas storage remains high at 94%, and we are yet to see a cold snap. However, weather forecasts for the UK and Europe don't yet show a consistent signal for a cold winter, which would see the European gas system tested for the first time since the reduction of Russian gas flows. JKM price curves responded to movements in the European and US markets, resulting in price increases across all contracts. Henry Hub curve contracts have increased across the board, with the effects of Hurricane Helene contributing to the rise in prices to the near curve contracts, and the remainder of the curve fell in line with the rest of the global markets. Prices on the November 24 contract rose 3.27% week on week. Forecasted colder weather, weak renewable generation from both wind and solar production, and increase in gas prices all contributed to price increases. 2 nuclear reactors remain offline in the UK. Hartlepool 2 remains offline on an unplanned outage, with an expected restart date of the 9th of October. Heysham 2-7 is offline with a planned outage and is expected to return on the 6th of October. Due to these outages, there is currently a total of 1,210 megawatts of nuclear generation offline. The summer 25 and subsequent curve contracts witness price increases, mirroring the movements in gas prices. Gas-fired generation remains the primary source of marginal fuel in the UK, thereby dictating price trends across the country. Further along the curve, seasonal contracts had seen increases, albeit much weaker than near-term contracts, in line with gas markets and the front month. The Summer 25 and Summer 26 contracts highlight a sharp backwardation, with the Summer Plus 1 contract trading at a near 10% premium to the Summer Plus 2 contract. The UK day-ahead market settled at £72 per megawatt hour, representing over a 15% discount to the front month contract, priced at £83.6 per megawatt hour. Throughout September, spot prices on the UK day-ahead auction averaged £75.26 per megawatt hour, limited by peaks of wind generation throughout the month. Wind generation averaged approximately 9.9 gigawatts in the UK over the past week, slightly above the seasonal normal of 9.3 gigawatts for this time of year. Due to this, we have seen a week-on-week reduction of 12.46% in the UK spot price. Dutch and German spot power prices saw an across-the-board decrease, with Germany posting a near 28.64% decline and the Netherlands 33.33%. Elevated levels of wind generation in both regions, well above seasonal normal, has eased upwards pressure on these prices. French spot power prices increased week on week as the country's nuclear production slides downwards. There are currently 16 French nukes offline, all on planned maintenance, with a total of 18,500 megawatts of capacity offline. Current short-term forecasts show wind generation to remain relatively in line with the seasonal normal levels for the upcoming 2 weeks, ultimately reducing gas-fired power generation, thus limiting the upside potential of the day-ahead spot price. Thank you for watching this week's market update. Feel free to follow us on LinkedIn for more information.